One of the legendary and great investors of all time, Jeremy Grantham, came out and said, yo, we are in a super bubble. We are in a super bubble and we're about to see it, the mother of all crashes. He actually said that the stock market is going to crash about 50%. He said, most of the super bubbles go below trend and stay there for quite a while. This time, trend is at most 2,500. It will be hard to prevent the market from declining to this level. Then he said, we have global housing problems, which we do, especially here in the United States. Housing supply is an issue. However, this is not 2008. A lot of us who are trying to buy a house right now have great credit scores. I mean, the average credit score of the person who is applying for a loan to buy a house is in the 720s to 750s range, which means that they have really good credit and are able to like pay down the freaking loan. Anyway, that's besides the point. He says, housing problem that could cause enormous pain. We have a stock market bubble like 2000. We have overpriced commodity. Oil is $88. Even right now, it's close to 90. We have the lowest real rates in the history of man. Everywhere is less overpriced than here in the United States, which is the peak of this bubble as it was in 2000. What it meant then is what it will mean today. And that is that the US will decline a whole lot more than the rest of the world. He ends it with just a nice little salt to the whole mixture. And he goes, we have a relatively humble measure of success. And that is, if you got out when I said get out, you will be glad. It doesn't mean you won't suffer in the meantime, but at some future date, you will be glad. Jeremy Grantham is like, I'm saving you. I'm saving your money. I'm saving your pockets. I'm ensuring that you can continue to compound so you don't have to start over. You don't have to thank me. You don't have to thank me, but I am saving you. The thing is, like, when you look at Jeremy Grantham's history, after the 2008 bubble crash real estate thing that we had going on, my guy hasn't been exactly spot on since then. He's kind of been a broken record, and he's kind of just been repeating the same thing. I mean, he came out in 2010, said the exact same thing. He came out in 2011, said the same thing. Came out in 2012, said the same thing. Came out in 2013, we got another one. 2014, another bubble. 2015, oh yeah, he got you. Every single year he was coming out. But if we look at the stock market since 2010, and we just see, what did the market do? Returned almost 3 times your money. So if you were one of these folks, like all of us rational-minded value investors who got spooked, heard Jeremy Grantham and say, you know what, this dude sounds rational. He sounds really wise, because if you look at things like the Buffett indicator, which is the market value compared to GDP, specifically US GDP, you would say, oh my gosh, the market is overvalued. You can look at the CAPE ratio and be like, oh my gosh, the market is super overvalued right now. But my question is, like, even if we are in a bubble, let's say we are in a bubble right now, how do we invest in a bubble? Does anything change with our investing strategies? Does anything change for those of us who have a 10, 20, 30-year horizon because we're not retiring for a long term, or we just have the ability to put money to work that we don't need today? Does anything really change? The answer is no. The answer is no. If you are a passive investor who is trying to build wealth over time, like I said, if you have a 10, 20, 30-year horizon, nothing changes. You keep buying. You buy all the way down and you buy all the way up. If we look at the S&P 500, let's just say in the last 5 years, every time the market dips, you're buying all the way down. Like during this small period of dippage, you buy all the way down and you keep buying all the way back up. You buy all the way down. You get the benefit of buying more shares in the S&P 500, usually is what I say to dollar cost into. So when the stock market starts riding back up, you get that appreciation, which at the same time, you're still buying as it's riding up. You buy all the way down during the crash of coronavirus in 2000 and you ride it all the way back up. In this mini crash that we're seeing in this year to date, where the market is down almost 7%, you continue buying. You don't care whether the market is up or the market is down, because you don't need this money right now. Now, does the market have periods, multiple periods where we've had literally 0% returns? Yes. Yes, it does. The thing is, you have to remember that this is the price that we pay for outsized returns. This is the price that you pay for being in the stock market. Risk is not a negative thing. Risk is the reason why you can actually grow your money in the stock market. There's always a reason why you're supposed to be afraid in the stock market. There's always a reason why there's going to be volatility, crashes, the market's going up, the market's going down, periods where things just look crazy. But if you just continue to invest, if we look at the history of the stock market from 1929, or I think it is 1928, if you invested $1 all the way back then with a 10.5% return, which is what we've had in the stock market going all the way back then, that $1 would have become $11,000 today. $1, $11,000 today. So your goal is to just keep investing. And for all my active investors out there who are trying to pick single stocks to outperform the markets, we keep paying attention to the same things. Are we buying businesses that produce good cash flow? Are we buying businesses that have a moat? Are we buying businesses that have a good management team? Are we buying businesses with a good margin of safety? Which I'm going to be 1,000. I don't always do that one. I'm going to be 1,000. I don't always buy with a margin of safety. I'm still trying to learn that part. But the point is, are we still doing all the research we know we ought to do? So when the market has all the fluctuations, we don't care. Even better, we actually look at maybe we should buy more. And so for me, when Jeremy Grantham comes out and talks about how the market is about to see a mother of all bubbles and it's about to pop and predicts that we're having one of the worst times in investing ever, I'm like, whatever. I don't care, because it probably works out to my benefit anyway, because this is the time that we are forced. This is the other thing for all of us who are young. We are forced investors. We are forced buyers of the market. We don't have a choice. This is how we build wealth. We don't have a choice. We are forced investors. And so would you rather be overpaying all the time if the market is in a bubble, or would you rather be paying good prices? It's like, would you rather buy an iPhone, like a good iPhone, for lower than it's worth, or would you rather overpay for the iPhone? It's a very simple thought process to go with yourself. So when you see headlines like this, get excited. Be like, you know what? Be right. What's my business? I got time. Be right. I don't need this money today. Be correct. I don't need this today. I can keep investing. Get excited. When you see volatility in the market, get excited. Get happy, because that means that you get to buy undervalued assets. You get to buy undervalued, underappreciated assets. Don't let stuff like this freak you out. It's whatever. Like, this is headline grabbing. I get excited when I see this. I'm like, ooh. And the market is all the way fluctuating right now. It's like, ooh, we love to see that. We love to see that. But anyway, that's all I got in this video. I just wanted us to come to terms with some of our irrational biases, even though we believe that we're all rational, even though we're human beings, and human beings, we're not very rational creatures. And for us to also keep in mind that even if that's all going on right now, it doesn't matter. As long as you have a long-term horizon, as long as you're buying businesses that are producing cash flow, as long as you're thinking of the future and you're an optimist and you think the future is going to be better, because one of the things that Jeremy Grantham kept on talking about was like, oh my God, we have all these issues, global crisis, all this stuff going on in the world. We all know it, global climate, all the stuff that his generation put on our head. He was talking about that and how that's going to be a problem in the future. And I agree with him, but if I still believe that the human beings, we have the opportunity to be able to solve that problem. We always have. And I believe that we will. Is there going to be pain along the way? Yes, but we still will solve these problems. But anyway, that's all I got for y'all in this video. I hope y'all learned one, maybe two things out of this entire thing. But let me know, did you enjoy it? Did you not enjoy it? Is there anything that you think I'm completely and totally wrong on? Put it down in the comments. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and I'm out. Peace.